Good day to you. It's Clive Maund of clivemaund.com. Now, in this important update, I plan to give you a roadmap for the PM sector correction, comprehensive roadmap, so you know what to expect in the coming weeks or over the next month or two. We will start with the date is, by the way, the date is Sunday, the 2nd of November, and this is coming to you from Maund Acres in southern Chile in Patagonia. We're going to start with a 4-month chart for GLD, SPDR gold shares, which actually shows you pretty much all you need to know, everything we need to see in relation to what's going on and what we can expect can actually be seen on this chart. Now, I'm going to go through the main points on this chart, showing you why the market corrected where it did, why the PM sector corrected where it did. And looking at this 4-month chart, I'll start by pointing out that GLD went in, and of course gold itself, silver, and the PM stock indices and GDX, etc., went into a parabolic blow-off move, which actually started in August, as we can see on this chart. And these parabolic blow-off moves invariably lead to quite a long period of consolidation or correction before an advance can get going again. So these people who are entertaining the notion that the sector can start higher again from here almost immediately are, I believe, mistaken. Now, the second point I want to make on this, I'm referring to some notes here, so you'll see me looking down, is notice when it got towards the top of this parabolic blow-off move, it had opened, the GLD had opened up a huge gap with both its 50-day moving average and its 200-day moving average. And the bigger the gap between the price and the moving averages becomes, think of it as like stretching an elastic band. The more you stretch it, the more likely it is to snap back. So at some point it just gives, and that's what happened when it broke down hard a couple of weeks ago. At the time when it topped out, it had become massive record overbought, all-time record overbought, as we can see on the MACD indicator at the bottom of the chart. And if you look at a very long-term GLD chart, you'll see that it is all-time record overbought. Next point is volume built up steadily to become very heavy, and right after it topped out, it plunged on tremendous volume. This is bearish for medium term. So that's still another point to observe. Now, the reason why what happened is it dropped immediately down to its rising 50-day moving average, where it found support, and I believe that could lead to a B wave bounce, as shown on this chart. One reason being, or a couple of reasons being, that the MACD indicator shown at the bottom of the chart is well below its moving average, so that often leads to a snapback rally, plus the fact that the MACD histogram, which is the bars, you can see at the bottom of that, is those blue bars, is showing an short-term oversold condition. So we could see a B-wave snapback sucker rally, which will then be followed by a renewed decline, C-wave decline back towards strong support. The strong support is shown above the rising 200-day moving average. Now, what we'll do is move on to another chart, which it shows GLD for the same time frame, but this time it just only shows the Bollinger bands, because these bands are sometimes very useful. And what they are is they're like think of them as a variable trend channel, like a kind of variable sensitive trend channel. And when you see the price rising into the upper Bollinger band, it frequently, what it's indicating is a short-term overbought condition, but it doesn't necessarily need immediately to a reaction. The point to note with the Bollinger bands is that when it presses against the upper boundary of the Bollinger band, the longer it pushes against that upper boundary, the greater the risk of a correction. That is eventually what we saw here when it flipped a couple of weeks ago. Now we're going to move on to with SLV, which is a proxy for silver itself, a reliable proxy for silver itself. It's pretty much the same setup, so I'm not going to talk about this in detail. Perhaps you can see for yourself that it's the same kind of thing as what's going on in GLD and thus in gold. And moving on again, similar thing with GDX itself. In other words, with precious metal stocks, we see that it's a very similar pattern. Same kind of volume build up, a gap, a break low, or a high volume gap lower, which mark the start of the correction. And now remember, you can scroll back and look at these charts at leisure. I'm not going to reiterate the same points on the SLV chart and the GLD chart as I've been the GDX chart as I've been talking about in the GLD chart. Now we move on again to look at the GDX. A GDX 1 month chart shows this correction in detail, the correction thus far. A point I want to make with this is that on, I think it was GDX peaked on Thursday, this Thursday, I forgot the day, I think it was the 16th of October, but on the Friday, the next day, it dropped hard on very heavy volume. I think it was Friday the 17th, I believe. It dropped hard on very heavy volume. We took that as a warning of a reversal. And on the Monday, in very quiet trading, you can see that doji that formed on Monday, I think Monday the 20th. And we took evasive action, selling or hedging. And then the next day, as we all know, it cratered. But on that Monday, we had all day to take our time and hedge and take profits and hedge. We got out of harm's way on that Monday before it plunged on the Tuesday. Now, the last charts I want to show you are from an article that I produced on Tuesday last week, which Tuesday the 28th, that is posted on clivemorn.com on Tuesday the 28th, pointing out that the dollar looked like it was setting up to rally. And this is the 1 year chart for the US dollar shown in that article. And the dollar had been forming a double bottom for several months. And it looked to me like it was just starting to move towards breaking out of this pattern, a bull flag forming. So the dollar rally was predicted. And we used the 1 year chart for US dollar index and also in order to include volume, we also looked at the 1 year chart for UUP, which is this US dollar index bullish fund. That showed a similar pattern, but in this case, it formed a head and shoulders bottom. And you have the advantage on this. You can see the volume pattern and also the accumulation line, which is shown at the top of the chart, which actually looked quite bullish. And you can also see at the bottom of the chart the momentum. The MACD was starting to trend higher on both the UUP chart and also the US dollar chart, of course. And lastly, the last chart, you'll see what happened to the dollar late last week on a 3 month chart. It broke out and rallied. And this looks like the start of a larger move, which could, of course, synchronize with the expected further correction in the PM sector. So that's all for now. If you like what you're seeing here and you want to ride these uptrends to the full and get out of the way before it caves in like we did, then by all means come over and subscribe to clivemorn.com. I'll be happy to see you. That's all for now. Have a good what's left of Sunday and the start of the week, and speak to you soon. Goodbye.